Hopefully this shit doesn't crash. Let me go over to YouTube. We're going to do live chat. Okay, I just got the... Excuse me while my teeth have a little issue. I am in the middle of bleaching my teeth. Not right now, but overnight you have to wear these bleaching trays and icky and blah blah blah. So okay, I got a lot by today. There's gonna be a lot of little stuff to go over. I'm starting it out with a market scan. Welcome to live chat. Remember to guard your privacy and avoid. Okay. What up, Star? What up? Also an upgrade to strong buy in the quant. Morning, Scott. Yeah. Good day. It is. I mean, Walmart's up what? 3-4%. Cisco's up 5%. Walmart is up 7%. God, I'm glad I own it. I'm upset I own more of XLY. Sold out. I mean, I've made a lot of mistakes over the past couple of weeks. It has not been a good couple of weeks for me. I mean, I'm fine. I mean, that's the point is, yes, you're going to make mistakes. Yes, you're going to do some things that may be an issue, but overall, I'm still benefiting. KNG, energy names. September 18th. I'm gonna go over. I got a lot today. There was a lot that I energy transfer. It's huge inside buy yesterday. Dividend. Okay. Go to sleep up. Okay. Energy leveraged ETFs. Energy transfer, man. That dude bought like what, $48 million worth, his largest single buy. That ain't nothing to sneeze at. Oh, DPST, our favorite. Leveraged ETFs. I want to look at the. Hold on. We're going to look at UCYB and DPST. I want to look at DPST because DPST over the long term, I know I said it was getting back to 90. And it's back there. I mean, look at that sideways trade. These are the regional banks. And ever since May of 2023, when you had this enormous drop of 30%, this was the big one, March. That was where Silicon Bank, 43% down, and then you had this May, which was, that second bank went bad. But ever since, if you bought the dip there at 68, even though you've been up and down, up and down, up and down, I mean, this one got all the way up to 121 here with the regional banks. That's crazy. Low cost Vanguard. Let's see. Nothing there. Spider sectors. XLB. Let's look at the watch list. There's got to be some. VRTX, Vertex Pharmaceuticals, GCT coming back a little. AMZN and NICE. NICE, man. Look at this. I mean, it's just been in a death spiral ever since those earnings. And I said, hey, 229, that's going to be a resistance. 180 is going to be a support level. And you're heading into these earnings. Huh. Interesting one, but let's go to the Dow. I don't think there's much on the Dow. Oh, there are. Wow. Travelers, Disney, Amgen, Cisco. NASDAQ. I hope somebody played the Cisco bump. CTSH, Fastenal, Vertex. Let's go to S&P. And then I'm actually going to start. I'm going to pull up Amgen, ACN, EMR. Okay, that's everything. We're going back to the strategy tester. Going to use the 4-hour. And we're going to run. Roblox almost over 40 again. Okay, let's see. We're going to pull this one up. We got to go to YouTube. And we're going to go to the live here. And I still don't get an ad. Jeez. Okay. Gonna pull up our links here. Applied Materials tonight. There's the earnings preview. We'll use Earnings Hub, which I'm gonna pull up here. AMAT. Alibaba missed. More on Chris. Alibaba just, I don't know. Bet on America. Cisco climbed 8%. Crypto bill. This could be good for crypto. Some of your ETFs like IBIT, which is the one I have, FPTC, ARKB. CrowdStrike retains buy holding with a new price target, which is under the price that I officially bought it at first. Bank of America says fade the mega caps and go equal weighted. They're saying equal weights at a discount. 28 companies. High quality stock screen. We'll go over how they set up theirs. Then we're going to go over these 13 Fs of some of these big ones. And I'm going to fly through these. So there's a lot of links open, but I'm going to fly through them. There's definitely some interesting ones. Bridgewater, Druckenmiller, Third Point adds to a new Apple stake. I mean, these guys just added a new Apple stake. It was a pretty big one too. Let me see. Third Point, Dan Loeb's Third Point took a new stake in Apple with 549,000 shares. Exited Marvell. This is the whole list, if you want to see it, of just kind of screenshots that Evan took, which was really good, of everybody's portfolio. This was interesting. This is Buffett's. Oh, that's my visualization for my sale of Ulta. Buffett took SiriusXM, which is an interesting play for him. And it's up 15% since he did that. So that's the Buffett play. Biggest stock movers of the day, Cisco, Nike, because I think it was Bill Ackman who took a huge stake in Nike. Raindrop candles in Seeking Alpha are really, really good if you haven't used those. This is the hot stock theme risk reward is getting better. Levels are getting base, but patience is a virtue. Again, it's kind of preaching patience. And this was a tweet from yesterday that I put up. The mystery broker, he took some off. Okay, and then I've got that, and I've got the Instagram clip, which is really good. And then we've got Walmart rallies. Like I said, I got a ton. You know what? I'm not, lipstick index, which is interesting. I thought that was interesting too. Okay. And I'm going to open up Seeking Alpha. And I have an idea for a portfolio. Okay. Oof. I do have an idea for a portfolio, and I'm going to try and put it together and try and put it into Savvy Trader, see how it performs. But it's an idea. You can back test it in Trendspider, see what you want to do, blah, blah, blah. But I'll bring that up too. That's going to be the first thing. Okay, let's look at the Qs. That candle right there. 423. That's right. That's right below that gap where you had this little drop down right there. That's crazy how precise that is. But if you pull this back, there we go. Okay. Okay. I'm going to hit record now and just go into it. Let me see if retail sales should have come in. I don't see the futures. Let me turn on. I had to turn on my do not disturb too. My focus mode. Okay. TQQQ I got out too soon, but oh well. It's just $1,000. We're talking like $30 to $40 I missed out on, but I took a 1% gain. Okay. I'm gonna hit record now. Good morning. It is Thursday, August 15th. I got a big show for you today. Huge show for you. A couple of things that we're going to go over. We're going to go over how to build a portfolio. I'm going to give you an idea, and this is going to be up front. This is going to be the first thing that I do, so kind of stay tuned till after the stories and stuff. But first thing I'm going to do is to show you how I'm going to build a portfolio, just an idea, hey, thoughts outside the box. If you don't have a portfolio, here's how you can do it other than using the daily stock pick core portfolio. Another paid newsletter member benefit. My newsletter, by the way, is super, super cheap. I'm going to post in the free newsletter today. I'm going to post a screenshot of somebody that just sent out their paid stuff. That's also a stock researcher and gives you ideas and things of that sort. Their bottom tier is $450 for the year, or $100 a month. Then their middle tier, which gets you, pro chat and exclusive content. I mean, $1,200 a year. That's down from $1,800 a year. That's the discount. And their Founders Club. Remember, I got a Founders member, founding members, for $400, which gets you free, one-on-one. Well, it's not free, but you can pay a reduced rate for one-on-one, like an hour of my time. But the Founders Club is $1,800 at this one. Mine's like $400 or something. But the newsletter, it's free. My pricing is so good. I mean, again, what I provide, I think, is good. But another member benefit, my new Xbox arrives today from Microsoft. Yes, I'm 54 years old, and my mom bought me a new Xbox. That's what was on my list, a new Xbox. I'm going to give my gamer tag. So if you're into Xbox gaming and you want to play me, I have the ultimate, the subscriber pass, whatever that game pass is. I have that. So if you want to challenge me to a game, just, add me. I'll put it in the paid members note. Probably this weekend, my gamer tag, if you'd like to add me. But we're going to go over all of that. I also want to give a shout out to, I'm getting my teeth bleached. Your boy is on camera every day. I need my teeth bleached. Now, my teeth are pretty good. But seriously, Dr. Talibi, just if you're in the Atlanta area, just Google tooth architect. She was an architect. She went to dental school. She became a tooth one. I'll put more in the newsletter as well with a picture. But you're going to see the difference when we're done with it in about 2 weeks or so. But she's a holistic dentist. She's amazing. Think about how precise an architect is, and that's how good your teeth will look. Incredibly reasonable prices. She loves what she does, and she cares for you as a patient. That's to me, I want a doctor with all of those things if they care for you. So I'll be doing that, going over that for the first thing. Now, I want to go over how to build a portfolio, and then we'll go over how dumb I am because, honestly, a lot of the stocks that are way up today, like Ulta, like Target, like Uber, like XLY, I sold out. I sold. Now, I didn't sell all of my XLY, but I sold all of my Ulta. I sold all of my Target. I sold all of my Uber. Yeah, and they're up today. But here's an idea if you want to build a portfolio and you just want to round yourself out. Say you don't want the S&P 500 because it's too exposed to 493 other stocks. You want to build up that kind of Mag 7. You could do that with 50%. The other 50%, maybe what you do is you go over here to Seeking Alpha and you just take a look, like XLK. You can take a look at XLK and you say, okay, what are the top holdings? And the top holding, Microsoft and Nvidia. Let's add a couple of shares of that. Remember, you can buy fractional shares. So you do go over here and you take a look at healthcare and you say, okay, healthcare, I like it. It's defensive in nature. It's doing fairly well. What are the two? Eli Lilly and United Health Group. So if you want to build a portfolio, I'm going to try and build this one. I'm going to try and backtest some of it. But what I can do is put it into Savvy Trader and say, okay, let's see how that performs against the market. Industrials, XLI. Let's take a look. What are the top two holdings? Because again, if you just put $10,000 into this, maybe it works out. GE Aerospace and Caterpillar, great companies. Great companies. You have RTX Corporation, which is 4% as well. This one's a little bit more evenly spread out. But great companies. So if you just take a look at the top companies in these U.S. equity sectors, That rounds you out. An idea on how to build a portfolio. That's just another idea. Now, I had never heard of this. Apparently, there's an economic study that shows during a recession, women purchase more lipstick, makeup over purses and dresses, which actually makes Ulta a defensive name. Okay? Warren Buffett, if he's predicting a recession, then Ulta would accelerate and do really well. That's the recession play. It's a lipstick index. I had never heard of it before. I didn't understand it. You know, it is what it is. Now, are we going into a recession? Because we talked about it before. Walmart rallies after issuing a confident. This is up 8% in pre-market. 8%. I had mentioned, I own Walmart. I like this stock. I thought if you could get it under 70, I thought it was great. Right now it's trading at 74. We had a buy in the algorithm at $69. That looks fantastic right now. That looks fantastic. A lot of these buys in the algorithm prior to earnings this year, this season, just this month, the past week, have been great. The MACD, super low. The RSI, no man's land at 50. It was a coin toss where it was going. If you are going to add to Walmart, I would do one of two things. If you don't have a position, just add to it today. If it dips down below 74, add to it at 74. If you want to put in a limit price of 74.20, you can get it at 74.20. Don't nickel and dime. Get into the name. Remember the 52-week high, you're at all-time highs. So at 74, you're at all-time highs. Is that a bad thing? Well, let's take a look at the weekly. Because the weekly, you had a little bit of a turnover. So you go back here, the high was 71. We're at all-time highs. The 50 days moving positive. You know, you're breaking out above this upper Bollinger Band. Is it a perfect time to buy? No. The MACD, super high. The RSI at 68. But this is a name that is growing. Their earnings were that good. That's how good this look was from Walmart. Again, Walmart, I can't say it enough. Really, really good. Let's take, again, I made a mistake. Look at Target. I sold out of Target. We can take a look at Target. Target today is up 5%. I sold at 132, 137, 134, 130. The algorithm said buy at 135. I was selling. I ignored my algorithm. And the reason I ignored the algorithm was this downturn, okay? I didn't trust it. I still don't trust it. Their earnings are coming out next week. Will it be good? The last time Target's earnings came out, they gapped down. I don't trust it. So am I buying back in? No. Am I upset that I sold it? Yes. Do I regret it? No. You make mistakes in this market. The point is you will make mistakes in the market. We can look at Ulta. Again, I'm participating in the market, but I'm not perfect. I sold out of Shopify. That's at 73. I sold out at 69. Was I happy about it? No. But I said, my thesis was it's an $80 stock. I saw this pop. I thought the consumer was weak. Walmart just proved the consumer is not weak. Home Depot said the consumer is coming back. Is this the market, the soft landing? Well, again, this clip from the compound, he goes over it perfectly. The perfect storm. It was the dumbest correction ever. The perfect storm. Buffett sold Apple, the low VIX, the cooling job market, the Fed not cutting, and the Japan unwind. All happened on Monday. That's it. It was the perfect storm of a 3-day session, which just culminated in that. Now, what does Walmart say? This is the CFO, a month ago, 3 weeks ago, said that Walmart, he came out and he said this. He said that the consumer is weak. He said that, but here's the quote from the CEO in this article. Okay. Each part of our business is growing. Store and club sales are up. E-commerce is compounding as we layer on pickup and even faster growth in delivery as our speed improves. Our newer businesses like marketplace, advertising, and membership, are also contributing, diversifying our profits, and reinforcing the resilience of our business model. That's amazing. Again, that's from this article. It's a quote from the CEO. That's amazing. I mean, again, this is a stock that you want to own. The lipstick index. We talked about Ulta is up what? 20%? Let's see. It's up 10%. 364. I sold down here 320. Doesn't make me happy. You know, I sold out on the way down. You're going to make mistakes. I think Target will be interesting to see if they come back. I sold Uber because it hit 70. And I was like, I'm in at 40. I think my average purchase price was somewhere in the 35, 36. The last time I bought this one was at 60 something. I sold out. I didn't like this super bounce into a weak consumer. I made a decision. I can buy back in. I can always buy back in. I was trying to, this is a great reminder. You can't time the market. You just can't. And again, these mistakes, they're learning experiences. I journal them. I make sure. But the key point is I should have listened to this freaking algorithm. The algorithm is amazing. And if you want the algorithm, what do? You just go to Linktree, linktr.ee/daily stock pick, and you use that top link. Sign up for Trendspider. It's $53 a month. Once you sign up, you go back to the Linktree. Just look at these things. Again, I don't have to sit there and look at charts because I've shown you I get alerts. Once you sign up, send me a screenshot of your actual account info in the email up here on the right-hand side. And I'll send you links to the 4-hour algorithm, the 65-minute algorithm. The point is that you can take emotions out of your trades. I got emotional, and it bit me in the ass. That's essentially it. It bit me in the ass. Now, am I hurt by this? No. These were smaller positions that I had gotten into that I let get out of control. I consolidated my portfolio. I am happier. I am sleeping better. That's the point, that I do make mistakes, but overall, I'm still participating heavily in this market. That's the point, is you want to be in the market. You don't want to get out of the market in a panic sell. Last week, in a panic sale, if you got out of the market, if you didn't get right back in, boy, you're buying back at higher rates. And that's the point. I think we're good. This isn't the signal that, oh my God, we're all of a sudden off to the races. The Qs still has the 450 as support. We just got through the 200-day on the 4-hour, okay? We're under the oscillator line. But we crossed up. Did you start adding? Because I did. I've been buying NVIDIA every day. I haven't telegraphed it. Small little buys, $1,000 here, $1,500 here, $5,000 here. Small little buys. I'm buying it every day. Am I buying SMCI back? No, I'm waiting for Dell. In fact, Dell, I wish I would have gotten it under 100. But I'm doing these little things to get myself back into the market in a structured fashion. My view on the economy is that we're good. My fear is that we get a little bit, it's very clear that any kind of indication on the downside is getting the sellers and people just sketchy. They're scared. They're just scared. And because we're at all-time highs, because of these things, because, you're hearing there's a weak economy out there, earnings are growing. And we went over this a couple of weeks ago, how the earnings needed to grow in order to support that PE. We're doing it. The economy's good. Again, the economy is good. Are we at a soft landing? No. Are there still fears? Yes. Do I think that we still see some weakness into September, into this Fed decision? Yes. Are you going to be able to buy lower? I don't know. Do you want to time it? You can't. Do you want to wait? I don't think you should. Doesn't mean go balls deep and start adding everything. But it does mean make sure you're in a place with your portfolio where you're sleeping at night and you're comfortable. Just like, oh my God, I should have sold it at its high 2 weeks ago. I should have sold QQQ. In the middle of July, I should have sold QQQ at 500 when it hit there. Just like that feeling, you're going to have the feeling of, oh shit, I should have bought QQQ down here. You don't know where it's going to go. You want to start playing and have a system. And again, the algorithm provides me that comfort level. I always regret not listening to this damn thing. It always bites me in the ass. Simple as that. I mean, that's my simple learning from this experience is when Altus told me to buy and I was selling, when Target told me to buy and I was selling, not my thing. I should have stayed in. Now, one that just got in the core portfolio, I got my email from Seeking Alpha. Again, these tools are all great. Seeking Alpha Premium, you import your portfolio and it emails you the quant rating if there's any change. One that just changed, MPLX, strong buy. We'll talk about, one that got a cross up on the algorithm, ET, energy transfer. MPLX is in the core portfolio. The reason it's in the core portfolio is because it's got like an 8 or 9% forward dividend. It changes. We can go in and look at that. But you just got a buy-in today, 41.41, right after the ex-dividend date. Okay, your dividend was paid out. It was taken out. We've got a gap up here to 41.85. This is not one where you just buy it and you trade it. This is one that you invest in over time. That 8% dividend, it's over 1 year. It is a fantastic, fantastic dividend payer. And this one I have in my retirement account. It is just a great, great stock. It's not one that's going to beat the S&P. It's not one that, during growth times, it's going to beat the Magnificent Seven. But I have this in my portfolio, just sits there. I put $5,000 in every now and then when I want, if I think about a bond. I'll talk about this too, because yesterday, what happened? I called up Fidelity, okay? I called up Fidelity because I wanted a bond. And I said, I called the bond desk. I basically got to the FVR. I said, hey, I want help buying bonds. I have never bought a freaking bond. And it got me to this guy, Bill. And Bill, I told Bill I've never bought a bond. And he looked at my portfolio and he said, wow, yeah. He goes, your risk tolerance is really well. What do you want a bond for? And I told him, I said, well, Powell's going to reduce the rates. And I was thinking a treasury bill. Because I'll save the taxes, and I've got a lot of cash that I've sold out because I did sell and raised a lot of cash. I don't want to put it all in right now, and I figured I'd buy a bond because I can always sell the bond. So he said to me, he goes, well, you're in a smart one, FZDRXX. I'll put it in the newsletter. I forget the symbol, but it's a Fidelity bond fund, FZDXX. That's it, FZDXX. It's a bond fund that's paying 5.15%. So you have your core position. So when you sell out and you go into cash, you can buy this FZDXX. You need a lot of money. You need at least, I think, minimum of $10,000 to get you started in FZDXX. But there are Fidelity funds that you buy that are tied to bonds. Okay? This particular one is paying 5.15% going forward. That will fluctuate. So as Jerome Powell reduces the rate, this one will go down as well. So this one will follow it. Bill was fantastic. I said, well, I want to buy a bond because I want some safety. I want to lock in that one. He said the 2-year is the highest that we've got right now that I would suggest. And he said it's 4.5%. But I'm getting 5.15% on my bond fund. He said, tell me why you want this 4.5% when you're locked in at 5.1. I said, well, if he reduces it, I want it, lock it in. He goes, well, how much do you think he's going to reduce it by? Because right now it's at 5.2, 5.1, somewhere in that neighborhood. I said, well, I think he's going to do a quarter point. He goes, that puts you above 4.5. This is why you have a good broker. This didn't cost me any money. Do you get somebody like this at Robinhood? Do you get somebody like this at Webull? No. This is why you develop a relationship with a manager and a brokerage firm that can help guide you. Again, I'm not your brokerage firm. I can help you look at stocks. I can give you some ideas. Your relationship with your money is your own. But I will guide you. If you want an introduction to my guy at Fidelity, who is Stuart is one of the best. I love him to death. He has given me so many ideas. I have a quarterly meeting with him, and it's been fantastic. Develop that relationship. You don't have to take their advice. You can do your own. You can make your own decisions. By listening to this podcast, you're probably more informed than most people that they deal with. Bill was telling me about this, about how he deals with grandmothers who have $17,000 and want to lock in 4.5%. And that's what they do because they're not educated and they don't know that right now you can just buy this fund at 5.15. He's been trading bonds for 30 years, he told me. He works from home. This is the type of quality that you get at Fidelity. I love it. And it was just one of those that again, the MPLX cross up here guides me to this experience. And again, how good it was. Now, let's go over the VIX because I want to show you the VIX. The VIX closed yesterday down around 17. We're at 15. I had said when you get below 20, then we can start looking at some type of leveling off. And where are we going? We're going up. When you look at this 5-day, this 5-day, where did we get under 20? We got under 20, it looks like about August 13th. August 13th. Let's go look at QQQ on August 13th because that seemed to be the time when we got over 450. August 13th, okay? August 13th is right here, okay? QQQ, it opened at 455. Its low was 455. That's when I started adding QQQ. When you got under 20 on the VIX, there's a clear strategy here. Again, these are using technical levels. It's just using the VIX, the support level of the previous all-time high at 448. It's using the charts. It's using your tools. Again, if you want seeking alpha and you want to set an alert, you can set a freaking alert on the VIX when it gets under 20 and it'll text you in seeking alpha. That's the tool that you want. And that's the second tool that I'm going to show you. The second tool on Linktree is premium exclusive, $25 off and free 7-day trial. You click on that, you get here. Again, you import your portfolio, you get the quant ratings. This is the second tool that I would guide you to get. It's Seeking Alpha Premium. And you can read all the articles that I post, everything. Let's talk about the mystery broker from Mike Santoli. Mike Santoli's mystery broker who called for a 10% correction. Oh, did he remove it? Oh, there it is. Who called for a 10% correction July 19th, issues a tactical buy for this on the September this morning, playing for a short-term bounce. Okay, that was on August 6th. Now, if we look at this, the mystery broker puts a short sell on stocks yesterday, exiting the successful tactical rally called from last Tuesday. He called it last Tuesday. He said, I'm going to look for a 10% bounce on this. Now, he's not taking his risk completely off. He's out. The paper trail here. That's the full paper trail. So if you want it, I'll link to it in the newsletter. Now, hot stock theme risk reward is getting better. Goldman Desk. Many of these themes are going to be multi-year in nature. Levels are getting better, but patience is a virtue. It's abundantly clear that crowding is a huge topic. When crowding is a topic, it's helpful to be patient. Patience. I've been issuing patience for a while now. Patience is what you want. Doesn't mean that you stay out completely. It means that you just are patient and you can add in. Like, say you want Walmart today. Go and buy Walmart today. Don't wait on it. Go and buy it. Just don't go all in. I don't think that we're over this. I don't think soft landing is already in there. What did Stephanie Link do yesterday? She bought the dip. She bought the dip on Chipotle. She doesn't believe the management team that's there. She says it's good. She says, hey, even though this guy's leaving, they still got 3 of the 4 horsemen that guided Chipotle up in the management seat. Again, it's one person leaving, not a bad one. Algorithm has you out. I wouldn't necessarily get into this until the algorithm gets you in, but it's up 1% today. And again, was this dip just too much? Do they have it in them to actually continue this run higher? And the run higher, make no mistake, that's a weekly chart. You're using this 50-day at about $50.92 as support level. 52.21 where you're at. So the MACD has reset. The RSI has reset. Do we have more downside? I don't know. I don't like their rice. I talked about it all the time. I don't like their rice. What's funny is when she went on yesterday, and I need to find the clip. If I find it, I'll put it up there. But it was a masterclass on why to buy a stock. And what's funny is Joe Terranova, who has been in this, by the way, for a very long time. He's been in this since about 20s, and we're at 50s. And it's not that long ago. I mean, you've doubled your money in a couple of years. Now, what's funny is Joe Terranova, at the same time, he said he went home and he looked at his kids, and his kids were eating Chipotle. And he said, hey, kids, did you know that the Chipotle CEO just is going to Starbucks? They said, we don't care. We like the food. We like the food. That's it. I mean, that's it. So, again, take guidance. You know, Stephanie Link, great investor, hot stock themes. There's other stocks out there that you can buy. If you didn't know, NVIDIA raindrop candles told the story. Okay, raindrop candles are in Trendspider. I'll include the link to the actual story where they explain raindrop candle. Essentially, this is split up into two. Say this is a daily, okay? So the daily, there's 8 hours in the trading day, or 7.5. The left side is going to be the first part of the day. The right side is going to be the second part of the day. And you can see these candles. Well, what do those levels mean? The little tick mark means the open. The tick mark on the right means the close. And then you have volume. When you see the volume up there, that's when you start to say, okay, it's closing at its high volume. It's closing higher than it opened. And the volume is there. Again, raindrop candles and exclusive to Trendspider. Another reason to get Trendspider. I love Trendspider. I've been adding, like I said, I've been adding to NVIDIA. I just think that it's going to be a killer earnings. I don't know if it's going to sell off on earnings, but I think we're hitting 130. Now, the biggest movers of the day. Cisco. Did I tell you about Cisco? I think it's going to hit 50. I think Cisco's on its way to hit 50. This was a great quarter. This was a great quarter for Cisco. Now, do you want to hold Cisco? No. Cisco is a trade. And the reason it's a trade is because of this choppiness here, okay? You want to get in at 45.45. You can't get in at 45.45. Right now, you're trading at 48. I think you got 50 in the mark. That's about another 5% move. It's up 7.17. I think if you could get this below $48 today, I think you do it. Look at the MACD. It's reset. This is a stock that has been in transition. You're below your 200-day. Where's the 200-day? It's at 50 on the weekly. You just had your death cross, but you had good earnings. And so I think this comes up from 45 to 50. You're at 48 right now. Not a bad move if you get to 50. I think you get to 50. Again, the quarter was really, really good. And I want to point out to you, I didn't mention this, but the CEO, when CNBC announces that the CEO is going to be in the morning after the earnings are announced, he's going to be interviewed. It's usually a pretty good sign that he's coming on. That things are going to be good. Another one, Ulta skyrocketed 16%. I said it before that I made this mistake. This is Buffett, purchased approximately 690,000 shares. It's a big mover of the day. Now, Nike, Bill Ackman's bought a ton of this, $229 million. Is this the turnaround? Maybe. It's undervalued. Might be a good move. So you can take a look at the biggest movers of the day. We're going to go over, and I'm going to go over this really, really quickly. I'm going to go over this, but I'll put all of these articles in the newsletter so that you can read them. They all go over exactly what these hedge funds bought, okay? Warren Buffett adds Ulta, sheds Snowflake down. There's others in there, okay? SiriusXM, he bought a bunch of SiriusXM. It's up 15%. Since pulled back at 6.87%. Again, any reaction in the market is an overreaction. By the way, this is my my chart of of Ulta. When did I buy? Up there. When did I sell? Down there. Yeah, that's my chart of Ulta. I just put that in for stuff. If you want a whole list, by the way, if you just want a quick way to read all about these things. Evan put out a great tweet with all of these screenshots put in there so you can read them. I think he does a really good job during these 13Fs. Third point, adds new Apple stake, sheds Marvell. They added Apple when Buffett got out of Apple. There's Uber in here. There's WTC. There's Marvel, CRH, Goldman Sachs. It's all in there. Druckenmiller pairs Apple, just like Buffett did. Coupang adds Adobe, TerraWolf, and others. You can read about what Druckenmiller did. This is some Bridgewater by Ray Dalio. Adds Amazon, Microsoft, exits Intel, Devon, and others. I've been out of Devon for a while. I just don't like the way that market is treating Devon. Devon had a really good quarter, and it didn't pop back up to 50. So it's out of the core portfolio. Renaissance Technologies by Jim Simmons, the late Jim Simmons, opened fresh positions in Netflix, AMD, and Qualcomm. I think Qualcomm's a little bit of an issue. I think Netflix, I think AMD, great buys. I just got out of AMD. AMD popped, I think, on that news as well. Michael Burry sheds Safe Bulkers, adds Hudson Pacific, and others. I have no idea who follows this guy. This guy had one great call. That's about it. He's been calling for the recession. Who knows exactly? Whale Rock dives into Google. Coupang sheds Salesforce, Marvell, others in Q2. There's a theme that's going here. You can see some are in, some are out. Pick the winners. Look at these guys' histories. All of these guys are multi-billionaires. But, again, you have to decide who you want to listen to and look at what they're getting into and what they're getting out of. The 13F doesn't tell you why. You need to understand and look at their interviews as to why. You can't just look at something and say, oh my God, he's getting out, I'm getting out. Buffett got out of his Apple position, half of his Apple position. And that was probably around $200. The stock is at $225. Paul Singer's Elliott Management exits NVIDIA. Adds Love, Southwest. Why would you add Love? I have no idea. ARM and others. But Soros tops and sells in Q2, including Alphabet, Salesforce, and others. Again, here's a great article. 28 companies in BMO Capital's high-quality stock screen. These are 28 names that they came up with based on a specific stock theme. B plus or higher in the S&P stock rank. BBB or minus or higher in the S&P long-term debt rating. 5-year earnings per share growth volatility. Lower than the S&P median value. Return on equity higher than S&P's median value. Cash as a percentage of market cap higher than S&P median value. These are good companies. These are really good companies. So take your pick. There's 28 names there. Bank of America says fade the mega caps and SMID and buy into equal weight. They are making the point that equal weight is undervalued. We can take a look at RSP. RSP versus the S&P. You go over here. RSP is the equal weighted. This is Invesco's equal weighted ETF. So it means one share of Apple, one share of Microsoft. It's not market cap weighted. It's equal weighted. And take a look over 1 year how that's performed. Again, the mega caps have outperformed this. What this article is saying is pull it back. Equal weight is it's undervalued. Not that it's underperforming, just they think it's undervalued. And they think it provides you some protection just in case we get some type of sell-off from September into October, which is potentially there. Potentially there. When you get the pullback, start adding to your position. 5 years, look at this. 64% versus the S&P, 92%. 10 years, the equal weight, 115 versus 170. You can see before 2020, when, the COVID, these were fairly even. And then all of a sudden we had this breakout, and you've had this breakout since 2023, where the mega caps, the top 7, have just outperformed incredibly. Now, a stock that I think is undervalued, CrowdStrike. I added more. CrowdStrike. I added more. Now, I've said it before, it's filling this gap. I was on Spaces yesterday. I said it's starting to fill the gap. Might have filled it already. I bought in the 230s because this gap up here, up to 250, 257, you're trading at 259 right now. It's going to fill. Your next gap is at 283. I think this name has it in it. Again, Palo Alto is coming up with earnings next week. That's in my core portfolio. I own more Palo Alto than I do of CrowdStrike. I said before, I wanted to own more CrowdStrike than Palo Alto because I thought CrowdStrike was going to kill it. CrowdStrike absolutely killed every computer in the country. They're getting sued for it. They're not going to have any exposure to this. Microsoft even came out and said, hey, it's Delta's problem. So, you have this gap in Palo Alto up to 363. You'll hit it. You'll hit it. The turnaround is happening in the cybersecurity space. Now, this article points out they brought their price target from 380 down to 290. I bought some at 310 in CrowdStrike. Now, I'm going to dollar cost average my way down. I'm going to put more into it. I like CrowdStrike. Their earnings are coming up right, I think, on or before NVIDIA. I think that one's an interesting one. Now, one other one that I'm loading into about my more MicroStrategy, not yesterday, the day before, I'll probably buy a little bit more. But Bitcoin, it's down below 60,000 again. Crypto bill can be passed this year, Schumer says, as Democrats woo the industry. Now, MicroStrategy, I'm down on both my positions on this. I'm sitting on this one. It's at 131. I think I bought right at 131 the other day. The algorithm said buy at 137. That may be where I bought at 137. Now, I'm sticking with the algorithm on this one. Did I sell here for a 7% profit? No. I'm adding to this position. I want it a little bit longer than this. I'm adding, I think Bitcoin, I have this and IBIT. Those are my two bets on the crypto industry. Now, if you want, do your research, find out which crypto you want. There's a whole list of them: GBTC, BITO, IBIT, FBTC. There's also, ARKB, BITB, some others in here. You can go in and research on Seeking Alpha. You don't need to ask me, but understand some are spot, some are futures. You have to know track which ones are doing well. Track it against Bitcoin. Cisco climbs as Q4 results surpass estimates. We're on to the earnings part of this. Cisco killed it. They're up 8%. They did really, really well. The CEO's being interviewed by Jim Cramer on here. Again, it's a $50 stock. You're at 48. So if you want some money, get into this one. It's got a decent dividend. I think you're capped on it, so get out when it's 50, I think. But again, I think this one's fine. Earnings summary for Alibaba. We talked about Alibaba. Somebody wanted to, and I forget who, but somebody asked me about Baba. What do you think about Baba? I'm not a big fan of China. I'm just not a big fan of China. This chart is messy. Now, I will tell you, the algorithm makes you 17% versus losing 13% on this. The algorithm got you in at 78, hasn't gotten you out. Where are you trading? 78.11. 78.11. You've pulled it back. Do I think that this one's going to go up? I don't think so. I mean, again, I take a look at the weekly. It's upper left to bottom right. Do I want to invest in this while it's still going down? No. Would I want to invest in this when it's at 96? Maybe. If we're in an uptrend, yes. Look at that 50-day. It's still moving negative. I don't want to touch this one. I don't want to touch it. Now, there are earnings tonight. There's Applied Materials. This is one of the suppliers of materials to the semiconductor industry. They're reported last time $2.09. Their expectation this time is $2.02. Their revenue, $6.67 billion. They reported about that, $6.65 billion on the last quarter. Now, what do I think of Applied Materials? AMAT is the symbol, AMAT. Okay, let's look at the chart, because then we'll go back to Seeking Alpha and we'll take a look how it trades on the quant, how it looks and that stuff. Here's Applied Materials. The algorithm has you in at 188. Okay. There's a resistance up here at 213 that I've said before. Now, you have this death cross here. This is the one that I would be a little bit concerned of. But we've been going really, really well. And now it's all priced into the stock market. You can see this one had severe resistance at that 213. You're trading at 201. In pre-market, it's at 206. Your MACD kind of reset. Your RSI is at 48, coming off of a 39 level. The last time it was down here was back in 2022, October at the lows. Is it the next move higher? Let's take a look at some of the fundamentals on AMAT. I'm not that familiar with this one. I'm not, this is my first time really looking at the chart kind of in depth like this. Ranked number 4 out of 29. The valuation is a D. Their growth is a C minus. Let's look at the valuation. The PE 24 versus the sector median at 22. PEG ratio 1.93, sector at 1.8. The growth is the issue in that PEG ratio. Okay, their growth, they're at minus 0.51% revenue year over year. Their revenue return on equity growth down 11%, where the industry is down 3%. They could make a crazy good quarter. Gross profit margin 47%. Profitability is an A plus. A plus. Momentum, it's a B. It's not great. Now, what does Wall Street say about this one? Wall Street says the average price target, it's 243. That's 20% up. 20% up. You're at 206 in pre-market. Might be worth betting on. They've steadily taken their price target up. This one had a pullback. This is one to watch. Now, if for some reason this one tanks, okay, chips may have a problem. I mean, Taiwan Semi's gonna run on this one. Marvell's gonna run on this one. All of those they will run down on this one. But I like this one. Again, it's part of the semis. I'm big on semis. I just think this one's an interesting one to watch. Am I putting money into it? Not. Here's the estimates. It is what it is. I'm probably not going to bet on this one. I'll take credit when it goes up, and then I'll say, hey, I tried to keep you out of it when it goes down. If I do, I'll let the paid subscribers know. Here's the social request. Tever, I've been pretty interested in Redcat, RCAT, the past couple of weeks. I bought in kind of early, so I'm up, but they are a drone company close to securing a government contract. I'm assuming the contract will shoot the price up around $4. Okay, here's the thing. This cannot be a major investment for you. Announcing that there might be a contract is called hype, okay? This could easily, they could come out and say, we didn't get the contract. You're back down at 87. I mean, that's essentially what this is. Chart looks decent. Algorithm makes you 177% versus 30%. Find a strategy to trade it. I can tell you, without even looking at the fundamentals on this, find a strategy to trade it. The 4-hour algorithm works. It's 177%. Your average win is 24%. It just got you in and an 119% gain. Could have gotten out sooner. If you noticed, in the 9-day, if you trade on my strategy of finding confirmation, which is right here in the education post, finding confirmation once you lose confirmation on that. If you traded out of that, again, if you trade out of that, you could have saved yourself, gone from 222. It sold out at about $2. You could have saved yourself. Again, you have confirmation. So the strategy looks good, but let's go over to FinViz and let's see. Because these guys are not making money. I can guarantee you of that. The market cap, it's $204 million. There are Chipotle franchises that make more than $204 million in a year. This is a small cap company. So Trevor, you can have at it. This is not in my wheelhouse whatsoever. I'm not going to tell you that the price can go to 4. I'm not going to tell you that the price can go to 2. I'm going to say trade it. Trade it. I mean, this is simple and easy. They're not making money. Their book value, 59 cents. Cash on hand, 8 cents. They're losing $24 million, okay? Shares outstanding, 74 million. What's 74 million times 0.08? $5.9 million. Okay? $5.9 million. $5.9 million. And they're losing 24 million? You think they can go to 4 when all of a sudden they're going to need money in what? The next few weeks? Come on. I mean, if you've got a profit in this one, take it. I'd hate for you to lose money, and that's the way you learn is you lose money because you ride this one all the way down. Again, everybody, if you think there's a contract that's going to shoot this up, everybody in the market thinks there's a contract that's going to shoot this up. And if you don't think that there are people who can get out of this quicker than you can, you're just fooling yourself. So I'm not a fan of it. It is what it is. Josh from Spotfiy. Hey, Gary, I'm looking to diversify a small portion of my portfolio with stocks or ETFs outside of North America. I've previously tracked BABA, JD, PDD, Baidu, and currently hold Taiwan Semi. I'm wondering if you have any stocks or ETFs that you would suggest for exploring. I would suggest seeking alpha, okay? Go over here to market data, and you basically you can look at emerging markets. You can look at U.S. equities. You can look at global equities right here. Here's the ETFs. You can look at countries right there. You can look at emerging markets, okay? You can look at Brazil, China. Here's all your symbols. Emerging market countries. You can look at all that if you want to get just into countries. Take a look at this list. This is investing in just the country. And then you have today, 1 month, year to date, 1 year. So Josh, simple. Do I have anything for you? No. I mean, that's you to do the research on. Do I have any exposure to this stuff? No. My companies in my portfolio, they probably have exposure to all this stuff. Do I have any access to it? No. And again, I'm not a big China fan. You're heavy into China with BABA, JD, PDD, and Baidu. I'm not. I just think that China needs to come back, and they haven't said they've come back. Dex asked me from Spotfiy, what do I think of Mara? I think they just diluted shareholders. I think they need money. I think they're probably down in the doldrums. I think now that you can buy ETFs on crypto, I think these guys are irrelevant. I think it comes down to earnings. And when you look at earnings of Mara, I mistyped it. When you look at earnings of Mara, income of 425, their PE is 8. It's not a great PE. I mean, it's not giving them, the benefit. Performance year to date down 35%. Average target price 21 when it's trading at 15. January, BTIG's research said, hey, it's 27. I'd rather own the Bitcoin ETF. Honest to God, I own a small portion of Mara. What's my thought on Mara? I think you've seen sideways trading on this one. I think you're down towards the bottom of that sideways trade. But do I think it could pop back up here to 83? No. I think the reality of this one is it's probably a $15 to $20 stock, and you're bouncing around there. Luke and Eddie. Hey, what's up? How's it going? Thanks for all the awesome content. I'm torn between buying Microsoft or Meta. What do you think? Microsoft or Meta? Okay. So I own a lot of Microsoft. It's in my top 5 holdings. I think you can buy here between 400 and 430 and be perfectly fine. I think this death cross means nothing. You've had your earnings. I think Microsoft is going to win in the AI game. They have the cloud business. They have OpenAI. They're doing Copilot. I think, Satya Nadella, great leader. I just told you I'm buying an Xbox. I got an Xbox. This is a diversified company that is killing it on every aspect of their game. I think long-term, you're fine. If you're torn between Meta's at an all-time high, 531. Okay? These guys print cash. We can go over here to Seeking Alpha, and we can type in Microsoft, and we can look at the PE of both of these. Again, these are different companies in different sectors. It's not something where you're actually looking at apples to apples. It's apples and oranges. It might be apples to Gala versus Red Delicious. But let's look at these two because Microsoft, we're going to edit the simples. We're going to take out everything else. Hold on. I just messed that up. We're going to take out ServiceNow, PanW, Crowd, and we're going to put in Meta. Because you want to take a look at the two differences in their fundamentals. Because one's going to be cheaper than the other. And that's just the way that it's going to be. And you can see price return over 1 year, Meta has killed it. So Meta has been, again, if I had a larger stake in Meta over the last year rather than Microsoft, I'd be killing it. Valuation, F on both. But don't look at that. These guys both print money. Okay? Growth, Meta's got bigger growth. Profitability, they're both A pluses. Momentum, A on Meta, B on Microsoft. You're in an election year. Meta is going to make money off of advertising. Mark Zuckerberg is a beast. This guy knows how to run a company. Microsoft over 1 month down 8%. Meta up 5%. 3 month, Microsoft is down 0.25. Meta's up 11.75. I would stick with a winner here. Again, if you're uncertain, just go between the two. You can't go wrong on either one. When you look at valuation, Microsoft is 31 PE. Meta's at 24. Different businesses. Again, Microsoft is a totally different business. Where's the market cap of both of these? Market cap $3 trillion versus Meta's $1.33 trillion. So it's a significantly bigger company. When you look at revenue growth, Microsoft year over year 15%, Meta 24%. Profitability, Microsoft 69%, Meta 81%. Honestly, this makes me want to buy more freaking Meta. It's run up to its all-time highs. I still think there is money to be made in Meta. Is that the end of this? No, I don't think so. I'd rather see you buy Meta closer to 500 or under 500. And my question, Lucas, would be, why weren't you buying it under 500? Why weren't you buying Microsoft at 400? It's at 419 now. You had the opportunity to buy these on sale. Remember that. Journal it. Because when you have the opportunity to buy these things on sale, you want to take that opportunity. Charles asked me about Royal Caribbean. What are your thoughts on the 6.4% short interest on Royal Caribbean? That's not a lot. I mean, the stock's trading at all-time highs. It's close to it. They have a lot of debt. The consumer's weak. I mean, there's some people that think about, hey, there's short-term on this one. Maybe I'm going to short it. Algorithm got you in at 149. You're at 152 to 154 in pre-market. They've reported earnings. This is an alpha pick. I don't think short interest on that one. That 6.4% is nothing. Nothing. When you get up to 30 and 40%, that's a lot. That's when you can get a squeeze. That's nothing. This is nothing. 135 is your support level because that's the all-time highs before COVID, and then it got killed on COVID. Now they're killing it. They're building more ships. You can't get a freaking place on this ship. So Royal Caribbean, I think this is the best cruise line that you could buy. Again, you can go out and do your thing. I don't think 6.4% short interest is anything to blink at. Trebs, SB, opinions on GMed. And do you think IBM will be a winner over the next decade? IBM, here's my response. I'll look at GMed in a second, but what do you think? I'm Nostradamus? 10 years? CEO could die? You get a cyber attack. You can get a nuclear attack. IBM ain't going to do well. Money's going to be worthless. But 10 years, anybody that tells you they know what a stock can do over 10 years, they're A, lying, or B, guessing. That's it. So what do I think? I don't know. I don't own IBM. I personally don't know. That doesn't mean that you shouldn't own it. Our risk tolerances are different. But again, I don't own it. But what do I think over the next 10 years? I think the last 10 years, it's underperformed the stuff that I've held, so I'm not buying it. Now, GMed, Globus Medical. Let's look at this one. They popped on the earnings. They've pulled back a little bit since their last earnings. Chart looks ugly, to be honest with you, at the very least. I don't know anything about this company, but let's take a look at the GMed. What do they do? Let's see. GMed is this a REIT? Medical device company develops and commercializes. I mean, it's a medical device company. It's got a market cap of, let's see, come on. A market cap of $9 billion. It's not huge. I mean, let's take a look at the valuation. Quant has it as a hold, and it's based on valuation alone. Their PE is 25. Their PEG ratio, 1.84. I mean, it's in line with everything. Quant has it as a hold. Wall Street says it's a buy. $79 is the price target. That's 16% above. Has it hit there? Let's see. Summary of the 52-week. 52 weeks, it's high as 74. So, it's up 1% today. I don't know. I mean, it's healthcare. I'm not into healthcare. You guys, Trebs, you listen. I'm not into healthcare. I mean, do I know this one? No. It's fine. I mean, again, if you know something about this company that's more than me, then have at it. But nothing in this chart tells me, oh my God, I got to run out and buy this one. I mean, look at the weekly. If we just look at the weekly, does that tell me, oh my God, I've got to run out and buy this one? Not really. It doesn't speak to me that, oh my God, this is a screaming opportunity. You know what looks like a screaming opportunity to me? MPLX. We're back into scans. What I do every day for you is I scan my 4-hour algorithm against a bunch of watch lists. The watch list I provide to you, the scanner I provide to you, everything that I'm doing now, I provide to you when you sign up for Trendspider. You can do all this on your own. And again, MPLX, buy in at 41. We're trading at 41.72. It's up. Market's up. UNH. This is part of the core portfolio, UNH. It's at 580. Boy, don't you wish you bought this under 500? When I said, hey, just buy it under $500. You're up 10%, 11, 20, whatever percent now. I don't know how to figure that out. Disney. We just got the 13Fs. I didn't see Disney as a huge screaming buy by anybody. Maybe they are because they're up 1.4%. This is one that you want to buy on a turnaround. Do you have a turnaround now? You do have confirmation, but you had confirmation back here at 91. Now, you could have sold out at 94 when you lost confirmation here and you got to 91. I'd have told you to get the F out if you're trading it. If you're buying this for the long term, it's a $100 stock. It will get back to 100. I don't know when. It's an incredibly expensive buy, but yeah. Now, Energy Transfer. I told you yesterday when we saw that huge buy, Energy Transfer was going to get a buy in the algorithm. It did. 1596. You're trading at 1607. Don't you wish yesterday you would have gotten it at its lows at 1562? That might have been nice. Again, the CEO and the chairman just bought like $48 million worth of this one. Huge. XLB. This is materials. This has a cross up now. And materials, we've talked about how the algorithm performs really, really well with materials. 89.27 is the buy. Over 2 years, back-tested results using this algorithm with every entry and exit that you see, you make 39%. If you just bought and held materials, you made 14%. That's over 2 years. Your average win is 4%. I wouldn't suggest trading it, but it's been a good sector to buy. We got GCT, which I sold out of, which has a cross up. Now Cisco has a cross up. We can talk about Cisco. Cisco, we talked about just their earnings, how they killed it. Wait until the afternoon. The afternoon should tell you where this one's going to settle out. Don't buy, right now you're at $49.65. I told you it's a $50 stock. It's at $49.69. If you were listening to me earlier today when it was trading at 46, when I first got in here, yeah, the hype is real. It's out there. People are buying. Leveraged ETS, TMF, DPST, which is a podcast favorite. Ever since that the regional banks with Silicon Valley Bank started going down, I said on the rebound, you want DPST. You really want DPST on the rebound. Look at this 4-hour. We talked about how this one was trading in a range for a good amount of this March, February, March, and April. And then we had that nice big bounce up. You had the pullback down to, and it broke that bottom. And I said, banks have to go. What is this? 32%? But I would tell you when you broke confirmation here on this 4-hour, 82% gain. Now, are you going to get back up there? Bollinger Bands are cinching up. They're cinching up again. Where are we going? We're on the upside of the 9-day. Where are we going? Probably higher. Probably higher. DPST, you want to trade this one. This is a great tool. Again, the great tool of this is trying to take emotion out. Let's take a look at trading this one on the 65-minute. Because again, something like a triple levered ETF, I would trade on a smaller time frame. And the lower time frame doesn't get you a whole lot, but you can see DPST, big move up. Let's see, it's up 9% today with the regionals. Probably IWM is up as well. We got a buy-in the other day on that one. But yeah, this is what you do. You use your tools to try and find the opportunities. You don't listen to a douche on the internet like me. Again, find your opportunities, make them. You're going to make mistakes. That's the key point. I make mistakes. You learn from them. Hopefully you don't make them twice. Will I sell one that pops 12% on the day before? Absolutely, I'll make that mistake again. Do I know what the lipstick indicator is now? Yeah, I know what it is. So if you want to support the podcast, a couple of ways. Okay, first thing is sign up for Trendspider, sign up for Seeking Alpha Premium. The other tool that I do is Alpha Picks. It's the 15th. We're getting another pick today. At noontime, we will get another pick today, and they are doing a special webinar on the volatility that you've seen. Alpha Picks is up 114% since July 1st, 2022. The S&P over that same time period is up 38%. This is a portfolio. Okay, if you've listened to me for an hour, you like your stocks. But if you want some new ideas, this is one of them and how you can do it. They are killing it. Their stocks are up 114%. That's why I'm an affiliate of theirs. Now, they tell you when to sell. Doesn't have to be the 1st and the 15th. They send you a special email when to sell. It's not like, it's a managed portfolio in that sense. So if you don't want to do the work, you just subscribe and then buy in. They give you the percentage of the portfolio that you buy in at, and you buy in. Again, you can take $10,000 and just buy the entire portfolio because you can buy fractional shares. That's the one tool. Again, 3 tools that I recommend. The 4th is Webull. I bought a bunch of NVIDIA my Webull yesterday. I want to buy NVDL just because I think NVIDIA it's going to 130 and NVDL is probably the best one. Now, my newsletter is free. It is free during the week. If you want to support me, again, I think I charge very fair rates. The weekend newsletter is a paid one. I'm going to say, if you want to play me in Xbox, get the paid one. Support me there. I'll play in Xbox. I'll play in whatever game you want. Now, if you're looking for a phone service, I use Visible. $20 off your first month when you use my link. The monthly fee that I pay is $25. $25. You get $20 off your first month. It's $5. Refer a friend on AT&T Fiber. That's what I'm talking to you on. All of this is on the link tree, and that's how you support me. If you're listening, I appreciate your support. I appreciate you listening. If you need to reach out to me, everything's right here. You can reply to the email, the newsletter that you get every day. You can chat in the Substack app. You can do whatever you want. You can get in touch with me. I had a couple of people from Australia last night message me, shocked at how fast I got back to them. Yes, I do respond to absolutely everybody, and I try and do it in a timely manner. If you have any questions, hit me up. I will talk to you guys tomorrow. Say bye. Okay. Wow, my iBit's crashing. Well, it's up. Wow, everything's up. Let's see. Indices, my Fidelity account check. And I'll read your comments. I know I went on for a long time. I started early because I went on for a long time. It was an hour today. Yeah, I'm up 0.54. Market's up 1%. Why the hell am I up 0.54? Hold on. That must be Apple is just not up enough. Apple's up 0.54. But shit, do I have ones that are down today? Pepsi's down. Snowflake is down. Snowflake actually recovered. Wow, I only have... How the hell is that possible? Oh, okay. That makes sense. Apple paid a dividend. Okay. I'm up more than 0.52. Apple paid a dividend, so it doesn't tell me how much I made today. Okay, let me read your comments. Yeah, I don't like Siri either. Speaking of Buffett, he took a large stake in Ulta. I got out of Ulta, Scott. That lipstick index, I had never heard of it. I'll release it in the newsletter. I had never heard of the lipstick index. And it was interesting because, let me block this number. Block number. It was interesting because, it makes sense. So I don't know that it makes sense to buy. It's pretty cheap, to be honest with you. I'm just not a beauty guy. And that's what it told me, is I'm not a beauty guy. I mean, if I had bought ELF at the same point in time that I bought Ulta, I'd have been way up. I think ELF was at like, $60-$70 and it was screaming buy. The problem is the growth here. And if they, Buffett got into it for an active position, maybe interesting. But I'm not a beauty guy. Morning, David. Nike's up because, I think it's Ackman that bought a bunch of Nike. Palantir has been a killer, Chris. 31.13. Again, there's no reason to sell it. I think if you sold it at 30, you're not making a mistake. I think you'll have a chance to buy it under 30 again. But it's so good. I don't own it, but I do own it in probably ETFs. Morning, Tyler. My dream is to be as wrong as you are. And Scott, it's a good, again, I'm very clear that 60% of my portfolio, 50% of my portfolio is Apple. So I live and die by Apple. The size of these positions that I'm in, yes, I'm taking tens of thousands of gains, but the percentage that is in these names is not significant enough. And when I get out of them, like when, trimming XLY, I got out of it in my retirement account, which was good because I got some cash on the sidelines and I've been able to add NVIDIA. And I think that's beating XLY over 5 days or somewhere. XLY is up 2.54%. XLK is only up 1.33%. So it's not great that I'm out of that. I've got cash. I'm making, like I said, 5.15%. The size matters. And when you're adding to your winners, you want to add to those winners. And I still think mega cap tech is where the winners are going to be. And Tesla's up 4.51%. I don't get it. I don't understand it. But I've got exposure in XLY. Morning, T-Dog. So, with Scott, here's the deal. If you can lock in 4.5% and the actual rate goes down and you're locked in at 4.5%, the value of that bond actually goes up. Now, bonds will typically stay at you can hold on to it forever. So you don't buy the bond thinking that the principal is going to go away. The principal does not go away if you hold on to that bond. So say you put $10,000 into a 1-year bond. You get the $10,000 back when you get the 1% or 4% interest during that 1-year bond. So you do get the interest and your principal back. It's not like they pay you the value of the bond at the end of the bond. It's that they pay you the actual amount that you put into the bond. So you're not losing your capital. It's a way of creating income from that capital that is safe. And it's just like your cash account, except that cash account the percentage is going to move. The bonds are locked in. So hopefully that makes sense. And there are tax benefits to owning treasury bonds. I'm not a tax expert, so there are tax benefits to actually getting 5% in a bond, in like a treasury bond, versus actually getting 5% of interest, because that 5% of interest you're actually paying taxes on. In a treasury bond, there's some taxes that are removed from that. So, and as rates go down, so, and Luke is that hopefully, Lucas, I wouldn't sell either one of those. I wouldn't sell either one. I mean, it was a great question, but I'm not selling my Microsoft to buy Meta. Even though I think Meta is going to kill it. Meta's just a cash machine. Fortinet, I got rid of half of my dad's position in Fortinet. I think it's a $70 stock, Tyler, and I could be wrong because it is blown through that $70 range. Now, the previous all-time highs, we can go and look at the weekly. The previous all-time highs are near 80. It's about 81 right here. So let's put that 81.24. That's the previous all-time highs. I think this range, I got rid of half of my dad's position, which was 250 shares was half of it. He had like 500 shares, something like that. I mean, he bought way back here. He bought like a 20s, somewhere in that neighborhood. So he had quite a gain in this. At 250 shares, I thought maybe it goes past 70, but at $70, 3 times 250 is what, $750? That's not changing his life. So for me, Fortinet, I think until it proves that it can push through this range, and again, that range is just, look at that resistance right there, 74.35, 70, let's see, 73.63. There's a couple of them in 73s. Now you've got this high of 73.67. Until it proves it can push through that, I think we're range bound on this one. And that's a weekly chart, just so you know. The MACD isn't extended. It can go significantly higher, so we could go to 80s. But look at that. That held that point for 1, 2, 3, a month. But on the earnings, it just dropped 26%. This was on its way to building that huge moat. And then the earnings took it down. So I like Fortinet. Am I invested in it? No. But he still got half his position in that. So he's not losing out. Now, if it starts to come back down to 73, I'll set 70. I'll sell the other portion at 70 and just buy back the full amount back at 60 something. WVF. Okay, so when you get a dividend, if you're buying a dividend stock, so say for instance, over a year, a stock is trading at $100, okay? And every quarter, they give a $5 dividend every quarter. Just that's a 5% yield if it's trading at 5, and that's a pretty high dividend at 5% each quarter. So it'd be like a 20%. It's like a REIT. What happens is that $100 stock gets marked down on the ex-dividend date, not on the payment date. The payment date, it takes $5 out of the stock. So if it's trading at 100, it'll go back to 95. So in order to grow your capital, it needs to grow by, what's that, 6%, 7%? It needs to grow more than the dividend. So, and very few companies that pay high dividends can grow faster in their stock price, faster than the dividend. So what you see is when you're getting income, your actual dollar amount, your actual capital is depreciated by that much. So in growth stocks, they're rather than taking the money and giving it out to shareholders, they're actually reinvesting it in the business. So a company like Palantir, which I don't think they pay a dividend. They don't pay a dividend. A company like Shopify, which doesn't pay a dividend, they take their gains and they basically put it back into the business to help them grow. The growth is what you're actually, so a REIT, for instance, will trade at a PE, price to earnings, of like 6. Okay. A growth company will trade at a PE of like 30, 20 to 30, something like that. I think Microsoft was 31. So if they're growing, again, they have to take that money and they put it back in, but they have to grow to support that PE. So the difference is you as a young person in my mind, my whole thing was I want to take it on growth. I don't want income because I was never very good at taking that income and reinvesting it somewhere else. I don't want income. I never needed income. I wanted my stuff to grow. So that's just it. Again, you can take a look at some charts. Scott's got a good point. Just go and take a look at some growth incomes versus dividend ETFs and take a look at the total return. If you go into Seeking Alpha and you do charting, okay, there's metrics in here. And if you don't have Seeking Alpha, I don't know what to do for you. But in the performance, you want total return, not price return, because price return just tells you the asset value. Okay, total return includes the dividends. And so your total return here, if we just, let's see, select symbols. We're going to do, let's see. growth, Vanguard growth ETF. Let's see, which one is it? VUG. So we're going to go in and do VUG. And we're going to take Ulta out of there. We're going to take, and then Vanguard dividend. VYM. So let's do VYM. Update chart. Okay. So there's the S&P over 1 year. The growth is up 29%. VYM, including dividends, is up 15%. S&P is up 21%. Okay. Over 3 years, VYM up 24%. VUG up 25%. S&P up 21%. 5 year. VUG up 136%, VYM up 72%, S&P up 92%. 10 year, VYM up 148%, VUG up 298%, S&P up 174%. It's a great way to look at it, Scott. Great way to look at it. So younger, you want to take the advantage of being able to recover, and you want to take those chances when you're younger. You want to, invest in Bitcoin. You want to invest in Apple. You want to invest in the Palantirs of the world. You want to invest in those growth companies that will 10-bagger or 5-bagger or whatever, multi-bagger, what you want. You want to invest in that kind of stuff when you're younger, because when you're older like me, you can't take those chances per se. It's great when you've got a big, a big thing. I use Apple as my my savings account. There were many people that I know, in particular in the 90s, that used GE as their savings account. Okay? They used GE as their savings account because that's how good GE was under Jack Welch. And they used GE as their savings account. And so in their main, this was their main stock in their accounts. And so look at that growth. Let's do this. We're going to go back here. Let's see. We're going to take these out. Remove this. Okay. We're going to take that out. We're going to take this out. I'm going to take this out. Remove that channel. This during the 80s to 90s was Jack Welch era of GE, and they used it as their savings account. Then came along 2000. Okay. September 2000, you had a high of 287. Okay. October 2000, 286, and you started to slide. And everybody said, there's no way it can go down. Well, these people at 287 lost 60% of their money by 2003. And they had to go back to work. That's the danger and the risk that I take with that much money in Apple. Now, I don't believe that Apple is going to do that. Could it? Yes. And that's why you want to take a look at these monthly and yearly kind of charts to make sure that the stock that you're in is not doing something like that. And with growth stocks, you really want to take a look at the smaller ones. If Apple were in danger of actually losing 50%, like it did during COVID, I mean, it lost it pretty much over a couple of weeks. We can look at Apple monthly. Let's go back to monthly. We're going to go to monthly. We can look at Apple monthly, and we'll just go to COVID. It went from 58 to 42. So not as bad as I thought. 58 to 42. Or I'm sorry, 35. 58 to 35. So you did lose about 50%, maybe 40%. But there was a reason for that. I'm sorry, that was January 2019. Holy shit. Where was, that was 2019. Where is COVID? There's COVID. So in February, you opened at 76. And by March, you were at a low of 53. So, I mean, you've gone through this. And, did I get rid of Apple here? No. I mean, this was the rising. They tried raising rates, and Apple just got dinged on the PE. That was that was during that period. And they raised rates over here, and the Apple got dinged. I mean, this was January 2022, 182. And then by December, by the next year, it was at 124. So hopefully that explains it. Okay, it is 10 o'clock. I am out of here.